developing countries. This is extremely interesting, and I'm sure we'll get much educated today. I'm not going to take much time. I just want to really appreciate you taking your time and agreeing to come and share the international discourse and also educate us. Thank you very much, Chairperson. Let's proceed. I'll be around until the end of the session. Thank you.
All right. Thank you very much, Professor Litsalo. That is our HOD, one of the gurus in the field. Now, let's give our guest the chance to present to us and make a short introduction. Dr. Ikechi.
Yeah, thank you very much, Dr. Christian, for this great opportunity. I do not take it for granted. I also wish to appreciate the HOD who has made his comments. You know, there is a saying that before you start anything, you have to recognize the heads. So I also wish to appreciate all other staff that are here and also the students. Thank you very much for this opportunity. And I believe that at the end of this lecture, that we will have a very good knowledge of the subjects that we are about to talk on. Thank you. Yeah, so can I start now?
Yes, thank you very much for that short intro. Can you please go through the presentation? Then we'll take questions after you have presented, Doc.
Okay, have I shared my slides?
Yes, we can see your slide.
Oh, okay, beautiful. Okay.
Please make them to a presentation mode. Just click there at the bottom. Yes.
Yeah, okay. I don't know why it's okay. Yeah. Financial inclusion in a developing country, an assessment of selected SADC countries. I will start by saying that financial inclusion is not a hard subject, is not, a concept that we should be scared of, because sometimes, let me start, because we are all students, we learn every day. Personally, my experience with respect to this subject is
Hello, Doc. Hello, Doc.
The first every country should be very interested in. So financial inclusion is defined as the availability and quality of opportunities to access.
Sorry. Hello, Doc.
Hello, I'm with you. I'm hearing you already.
I think we have a problem with the network connection. Can you please share your slides? Make it on the full view.
Yeah, it's already there.
Okay, sure.
Are you seeing it now?
Yeah, continue, Doc. Sure.
Okay, no. Okay, I was just saying that financial inclusion is not a subject that we should be afraid of. We should embrace it, as it is, so that we will be able to understand that concept. For us that are in sub-Saharan Africa, and of course we know that sub-Saharan Africa is a major region in in Africa, and like we have 54 countries in the whole of sub-Saharan Africa, and in SADC we have like 16, between 14 and 16 countries now that makes up the SADC region. So financial inclusion is defined as the availability and equality of opportunities to access financial services. It refers to, a process by which individuals and businesses can access appropriate, affordable, and timely financial services. These include banking, it could be loan, equity, insurance products, and of course, it's an aspect of financial development, which is widely regarded to halve poverty. And then I'm trying to get to the next slide. Okay, so without inclusive financial systems, poor individuals and small enterprises, they need to rely on their own limited savings and earnings to invest in their education and all other personal effects that the business could be thriving. So financial inclusion is an important tool for eradicating poverty and narrowing income inequality. And as such, it is an integral part of inclusive development and a building block for poverty reduction strategy. Now, you can see South Africa from a distance, and which is South Africa is a major force in the SADC region. And we already know that that South Africa is a major force with respect to its role in servicing the other SADC countries like Namibia, like Rwanda, like Zambia, like Zimbabwe, like Lesotho, like Mauritius, Mozambique, and Madagascar, and all other SADC countries in the region. Yeah, so the importance of financial inclusion from a theoretical basis, and because we are researchers, so we need to touch on theories also. So economists, they contend that the domestic savings rate increases through financial deepening. Hence, borrowing costs can be lowered, which will stimulate investment. So Mackinnon, 1973, stated that two assumptions for this proposition. Firstly, that all economic participants are independent and have the ability to self-finance, and secondly, that all accepted investments are of indivisible values. Yeah, you can see challenges in our SADC region. People, the plumbers, the tilers, the builder, the plasters, they are just, depending on their meager income. And the government, not just the government, the stakeholders that can drive economic growth could help in this issue. So let's touch on this theoretical basis for financial inclusion as financial development actor. However, there are a number of theories which have been put forward to explain the relationship between financial sector development and poverty, such as Jalilian and Kirkpatrick, who posit that financial sector development allows the poor to participate in formal financial activities. And then DFAID 2004 stated that financial sector development enables the poor to draw down accumulated savings or to borrow money to start micro enterprises, and eventually leads to wider access to financial services, employment creation, higher incomes, and of course it will help to halve poverty. Yeah, so effects of financial sector development on poverty. Firstly, I will say that financial development can lead to poverty reduction by promoting economic growth, which is consistent with the trickle-down theory. Trickle-down theory contends with financial development and can spur growth, thereby lifting the masses from poverty due to the wide avenues created by economic growth. Secondly, economic growth could increase jobs for the poor, and it has been suggested that higher growth rates could reduce the wage differentials between skilled and unskilled labor at the later stage of development. Thirdly, high growth could lead to higher tax revenues, enabling the government to reallocate or allocate more fiscal on social spending, such as health, education, and social protection that benefits the poor, enabling them to invest more in human capital. And of course, SADC's biggest problems. SADC's biggest problems, according to its citizens, is stubbornly high unemployment rates. For instance, new data from Statistics South Africa showed that the first quarter of 2019 experienced a rise in South Africa's unemployment rate to 20.6% from 27.1%.
Doc, Christian here.
Yes, I'm hearing you.
Yeah, actually, we have a problem. Your slides are not moving here on this side. I don't know what's happening. They are not moving since you were at the first one. So can you please try and put it on the presentation mode?
Oh, okay. Okay, let me try to do it again. I think it was the network problem that disrupted it. Sorry about that. Yeah.
Yeah, not a problem. You will continue where you were.
Yeah. So are you seeing SADC biggest problems?
No. We see effect of financial sector development on poverty.
Oh, okay. So SADC biggest problems now. I hope it's showing now. Okay. Sorry about that.
Yeah.
Don't
Just
worry.
continue, Doc. It's fine.
Okay.
Yeah, we see it now.
Okay. No, I said that SADC nation's biggest problem, according to its citizens, is the stubbornly high unemployment rate. And for instance, in South Africa, I mentioned that in 2019, that's the first quarter that the unemployment rate rose from 20.1% to 27.6%. So broadly, the problems can be categorized into two. That is micro and macro economic problems. So you can see some flags of the SADC. Now we have the micro and macroeconomic problems, and the problems are outlined. Environmental issues, externalities as well, already mentioned. Monopoly, inequality, that is poverty, volatile prices, irrational behavior, recession, and all that. So the 9 major problems that weigh the SADC economy down. Okay. So the 9 problems that weigh the major economy down, like the economy is limping along, tax collection is lagging, revenue shortfalls, limited room to raise additional taxes, and pressure to cut expenditure, policy uncertainty, universal health care, prescribed assets, and risks of breaching the expenditure ceiling. And then the next slide is the diagram, and it's showing a connection between financial development, financial inclusion, and financial integration. All affects economic growth of the SADC. And then what are the objectives of financial inclusion? What are the objectives of financial? The objectives is simply to increase accessibility to a broad perspective, in such a way that the financial products and services will also be increased. There will also be designing of specifically to meet the needs and requirements of adults. Then the providing of these financial instruments, products, and services should be done at affordable costs and should be delivered in an accountable and sustainable manner. So it is an instrument that provides access to financial products and services that households, businesses, and vulnerable members of society need to afford, need at affordable costs. So now there's a diagram here, which is showing us a dimension, the dimension of financial inclusion. We have access, which is the availability of formal regulated financial services, physical proximity, and affordability. And then the second aspect of financial inclusion is usage. How are those financial sources or provisions utilized? That is the actual usage of financial services and products, regularity, frequency, duration of time used. And then lastly, quality. Quality to client needs, appropriate segmentation to develop products for all income levels. You can see SADC financial inclusion access stand. Then the next slide is still on the objective. So financial inclusion intends to help people secure financial services and products at reduced prices, such as deposits, financial deposits, funds transfer services, loans, insurance, and payment services. So these are the the aspects or the various points of financial inclusion, payment services as well. So mostly it aims at establishing proper to cater for the needs of the poor. So it will help the poor a lot if there is financial inclusion. Let's look at definition. We need to define some concepts or some terms. Like deposits. Deposits are a sum of money paid into a bank or building society account. Deposits are also regarded as cash funds, which are an alternative to bank or building society deposits. They are a sum payable at first installment on the purchase of something or as a pledge for a contract, that is the balance being payable later. Now, let's look at loans. What are bank loans? A bank loan is when a bank offers to lend money to consumers for a certain time period. As a condition of the bank loan, the borrower will need to pay a certain amount of interest per month or per year. Now, secured bank loan, uses a collateral. Of course, we know that some farmers and some businesses, they will be asked to supply their collateral before they will be offered such a service by the banking institution. So you can now see a diagrammatic representation of SADC region with respect to financial inclusion and how they are acquiring financial services. Now, definition of terms is continuing. Now, what is insurance? Insurance is a contract represented by a policy in which an individual or entity receives financial protection or reimbursement against losses from an insurance company. Now, there are 7 types of insurance: life insurance, personal insurance, property insurance, marine insurance, fire insurance, liability insurance, guarantee insurance, and of course, insurance can be categorized based on risk, types, and hazards. And definition of terms as well: payment services, which is also part of the financial services offered by financial institutions. Now, for payment service means a cash deposit or withdrawal and electronic payments. For instance, a direct debit, standing order, credit transfer, debit card, credit card transaction, or transaction carried out through online services. One thing about these services we are talking about is that it will also help micro, small, and medium scale enterprises to actually grow and develop and also do well. So indirectly, we know that the SADC region has lots of smallholders, practitioners, even in the farming, in the agriculture sector as well. So example of payment services that can be offered to those small holders could be mobile, it could be e-commerce, and also the PSD2, that is the revised payment service directive and data analytics. Then financial inclusion development. Okay, let's get to, I want to show us a table of the fundamentals of agriculture sector growth focus with respect to financial decisions that are made in some SADC countries. We have seen Botswana. This is actually a research that was carried out by one of us, and we looked at the male and the female as cutting across the 5 countries, and we did for Botswana, then Democratic Republic of Congo, Malawi, Mauritius, and Mozambique, and we saw that the males were more in most of them, and they are the ones that enjoy financial decisions. So the females, so this is showing us that the females need to be encouraged in with respect to financial inclusion. So South Africans do not use mobile banking due to mistrust and lack of knowledge. So this is also a challenge to the SADC region, SADC region, because South Africa is like I said earlier, is a major force in the SADC region and services most of the SADC countries. Now, South Africans do not use, I've said it before. Now, what are their reasons for not using this financial inclusion provisions? Fear of fraud never occurred to them. Well, some are saying that they do not understand, while some are saying that data usage, like, data to acquire data like I have done today, some cannot afford data to hook up online and do those services. Then, of course, some of them are saying that it's too expensive, while there are other reasons as well. Now, tools for approaching financial inclusion. What are the tools to approach financial inclusion? Financial inclusion is a tool used to enhance economic growth, as I said earlier. It helps to alleviate poverty, it creates employment, it contributes to education as well, and it reduces income inequality in the country, and not just in the country, and in the regions. The countries that make up the SADC and even other sub-Saharan African countries, through providing affordable financial goods and services to low-income groups through financial institutions. Financial inclusion measures the inclusiveness of an economy. So the measurement of financial inclusion is combining the multidimensional financial aspects of the economy, such as banking penetration, available of banking service, and usages of the banking system. Foremost, there is no standard method for measuring financial inclusion. So we need to take note of that. Now we have room for researchers to delve into that aspect as well. These tools that may constitute yardsticks by which financial inclusion can be measured on economic growth. Financial system in the SADC. Importance of economy-wide growth. For economy-wide growth, the financial system in South Africa or other SADC countries remains underdeveloped compared to other developing economies, especially in this region or even in the Eastern African countries. With the invention of mobile money, some countries such as Nigeria has experienced positive growth in the financial sector in the recent decade. Financial services, including credit, payments of services, and savings, are currently being offered to individuals via mobile money, thus broadening access to financial services. So it is important to know that theories and empirical evidence have inspired the assumption that financial sector development induces poverty and income inequality curtailment. Yeah, so quickly, boundaries. There are boundaries of financial inclusion. The goals for financial inclusion, as stated before, we are not limited to geopolitical arrangements. That is gender-specific goals were also set. No, it's not just that. It's also to reduce for the number of women who have been excluded, because women have been excluded from this package. And then let's get to the next slide, which is telling us about the inaccessibility of financial services in the SADC countries, a situational analysis. A common problem in the SADC is the lack of access to financial services that I said earlier, and lending requirements such as legal physical collateral of lower income households. So lower income households have to be helped, not just in the SADC region, like cutting across the entire African countries. These limitations have the impact of restricting some households that are in relatively isolated geographic areas with low population densities. As a starting point, measurement of the access to financial services is important to begin to understand how financial inclusion may influence economies. To date, there has been little research done on financial inclusion in Africa. So let's look at the merits and demerits of financial inclusion. Financial inclusion is a necessary condition for financial deepening, like I said earlier, which helps to address the basic issue of growth with equity. So equity with growth is very important. And of course, it is mainly concerned with eradication of poverty and is a step toward inclusive development. That is a whole holistic type of development. Like we've seen in some developed countries that they have, they have financial inclusion, that even the poor masses can be taken care of. Why can't the poor afford food? Why in SADC we still have people that are so food insecure, and those social vices are heightening every day just because of poverty? Why can't we why can't we, we the researchers, let us help, as stakeholders, to help also the government, to suggest to them, to guide them in this. And of course, the government, they have to listen to us, the researchers, in our labs, where we conduct these researches. So these financial services enable the poor to have better nutrition, as I said, with respect to food security, housing also, education for children, and better healthcare, and improve standard of living. Financial inclusion, therefore, it serves as an effective way, not just to alleviate poverty in SADC, but also for global poverty. So financial inclusion, there is need for financial inclusion in the SADC, and like I had earlier mentioned, the crashing of the prices. There has to be crashing of the prices of diamond, the crashing of price of diamond and other goods produced or endowed in the SADC in the world markets. It could set an ugly trend in the motion, which could result in massive losses of jobs in the public and private sector, inability of federal and state government to meet their monthly obligations, and resulting in workers being owed wages. Now, to make the matters worse, xenophobic attitude, xenophobia and other social vices in the selected countries of the SADC have made it difficult for business activities to flourish without interruption. So we need to be very, assertive with this. We need to be very direct with this as researchers. Now let's look at a table which tells us the gender issues associated with financial inclusion. Now Botswana is here, DRC, Malawi, Mauritius, Mozambique, South Africa, Swaziland, Tanzania, Zambia, Zimbabwe. These are the years that the survey was carried out by the researchers, and we can see the sample size as well. The total was 46,619 persons where they conducted. And of course, we can see some of our farmers in the farm practicing the SADC region. So this is the proportion of adult population that are financially excluded. We can see those that are financially excluded. By my left, that is the red color diagram. You can see that these are the ones that are excluded. While in the right, the uptake of financial versus informal financial services. South Africa in 2014. And you can now measure and see that Mozambique was actually experienced the highest with respect to they were financially excluded, now followed by Democratic Republic of Congo. So South Africa is actually doing well. Mauritius is the highest with respect to those that are financial, that have financial inclusion. Now, we can see that agriculture is very important with respect to those that will enjoy financial inclusion. Yeah, I had to feature this slide because we are in the fourth industrial revolution era, whereby financial inclusion is very important. And then let's meet Africa and do business so that we can include the wherewithal of our farmers, and not just our farmers, of micro, small, and medium-scale enterprises. We can help them to move forward. Then conclusion, from all indications, financial exclusion rates in the SADC region have reduced in general. And women too have enjoyed an increase in the levels of financial inclusion. So there is improvement, and there is also room for it. The place of women, and not just women, and also the youths, because the youths, they are the future of tomorrow. They have so much energy to, part of where I work, I am a senior advisor with the Association of African Future Leaders, and we help to re-engineer many youths with respect to practicing agriculture as a profession, because agriculture has so much that it offers, and people are so our youths are so scared to delve into agriculture, as a profession. Why? Because of the that perception of antiquatedness, that agriculture is old-fashioned. And I don't blame them, because of course by the time we will start bringing artificial intelligence, of course we have some very good accounts of artificial intelligence, now blockchain technology, and even IoT, that's Internet of Things, that's coming. So much, with respect to the fourth industrial revolution, and we will have a welcome, improvement in the economy of the SADC region. Of course, the economy of the SADC region will definitely grow with respect to the blessings of financial inclusion with respect to the fourth industrial revolution. So in 2016, financial exclusion rates for women had reduced by 10% over the 6-year period. Now, this modest success can be attributed to the following: increasing penetration of the package of blessings of the fourth industrial revolution and digitization, such as electronic payment platforms, electronic banking, and usage of mobile phones in conducting banking transactions. Yet, the modest achievements with regards to financial inclusion at 59.1% of women falls short in comparison to global average of 65% for women. As such, the National Financial Inclusion Strategy still have a lot of work to do to reduce the financial exclusion rates so as to meet the 2020 targets. Of course, we have been in a pandemic period, which has also not helped us. So finally, conclusion, it is important that the National Financial Inclusion Strategy revise its strategy and focus on branchless banking or agent banking. In adopting this approach, the aim would be to increase access to banking within the rural areas. So currently, let's just talk about the use of branchless banking remains limited in comparison to what can be achieved. So, concluding it, agent bank models have been successfully used in Kenya. So I am suggesting that even as it's being used in Kenya and also Bangladesh, these are developing countries as well. And, Kenya represents Africa, Eastern Africa, while Bangladesh represents the Asian Africa, to increase the financial inclusion rates in rural vicinities. Also, to improve the financial exclusion rates of rural areas, it is important that financial services be designed to meet the needs of the rural dwellers. Designing financial products and services in that manner is likely to yield an increase in the financial inclusion rates of
Hello, Doc. Dr. Ikechi.
Yeah, thank you.
All right. You are done, then, eh?
Yes, I am.
Yeah, network issues when you were about to finish. But thank you very much for your informative presentation. We really appreciate your time. Serious issues were raised here, and I think students might have questions, students and colleagues and people that are working. So we will take questions. After that, I will have few announcements, and then I will give it to the HOD to do, the closing remarks. So can we have questions? You just raise your hand. There is an icon there where you can raise a hand, and then we'll take your questions and discussion. Okay, just take all of them, Doc. You write them down, and then you respond to all of them one by one. Or you prefer to answer them one by one?
Yes.
Okay, so let's take them one by one. Can we have questions, comments, anything, colleagues?
Yeah, but in case they also wish to contact me, you can also give them my contact, and we can maybe talk about research. So thank you.
Yes. One thing that I forgot, Doc, is that you also have to give us your slide presentation so that we share them to our students and colleagues.
Definitely.
All right, thank you very much.
Definitely, I will do that. There's a hand raised up.
Yes,
Luvengo.
we have a hand there from Usafa Luvengo. Can you please ask the question or comment, Mr. Luvengo?
Dr. Ikechi.
Yes.
Can you hear me, Doc?
Yes, please.
Yes, you are speaking to Mr. Luvengo here. I'm the co-chair of this seminar.
Yeah,
yes.
Okay. Dr. Luvengo,
Yeah,
thank
Department
you.
of Agricultural Economics, Mafikeng campus.
Oh, okay. Wow.
Yes, thank you very much for that informative and wonderful presentation. I was very intrigued by some of the issues that you outlined, and then I have one or two questions maybe on some of the aspects that you raised. We know the issue of corruption in majority of our African countries, one of the biggest problems, including South Africa and Nigeria as one of the top corrupt countries. We know in South Africa we just received 500 billion rand, and politically we don't know, but it's somewhere there. We'll find it. So when it comes to the issues of corruption, how do you think it affects financial inclusion for developing countries? Thank you. That's my first question.
Oh, okay. Yeah, can you ask the second one so that I can answer them?
Okay. Yes, also, we know that majority of African countries also, they depend a lot on international finance bodies like IMF and the African Development Bank. And in the long run, it affects our liquidity and solvency. How does that also, in the long run, affect our financial inclusion as a SADC country?
Okay, sorry, I didn't get that. I didn't get that second question.
Okay, the role of international bodies such as IMF,
okay.
Yes, and African development banks, in the long run, how do they affect our financial inclusion?
Okay, thank you.
The last, last one.
Okay.
Sorry.
Let me start by answering the second one. Well,
Okay.
those are international banks and also international institutions like the World Bank, like the African Development Bank, and among other international agencies. Well, they help. Well, they help a lot to provide funding, so interventions and subventions also to some countries, agencies. Of course, we know that even during the pandemic, that there were some palliatives which they were that they provided for some of for some developing countries, and some people, some persons are saying that they did not enjoy that benefit, with respect. So, and that takes us to this first question that you asked. How can, with this issue of corruption that we are having, how does it affect financial inclusion? Of course it does, because if the government is not doing what they are supposed to do, if they are paying lip service and they are not, helping to meet the needs of the small holders, the micro, small, and medium scale enterprise, especially in the SADC region, so especially even in South Africa, because they are major platforms that helps to create jobs, and people's livelihood have also been sustained over time through the small and medium scale enterprises. So if there's no proper framework for financial service delivery for them, then of course there is, that is corruption, and what will lead to is people will start being discouraged. People will start, delving into social vices, and that's why people are not happy again. People are not enjoying their livelihood. Those benefits of financial inclusion is not actualized. So you can see that we have to develop a framework, the government and also the stakeholders. There must be a framework in order to help to channel every provision or service from financial institutions. Thank you. I hope I did justice to your question.
Yes, you did, Doc. You did, Doc. Thank you very much for that.
You're welcome.
Yes. I just wanted to ask one last more before you go, so that I'll sleep well.
Please do.
Yes. The issue of asset ownership and land tenure issues. Do you think they also affect, maybe in terms of credit access, financial inclusion?
Yes, of course it does. It will. And of course it does. Because yeah. Do I explain more?
Yeah, because majority of, especially in South Africa, majority of the land is either government owned, or we also have traditional owned land whereby you get PTO, permission to occupy. And as we have seen, majority of the farmers in this country, they are operating under permission to occupy. So what we've seen is that, they do not have collateral to can have a lot of access to financial benefits.
Yeah, it's very, very important that our governments and also stakeholders for of this should. Sorry, are you listening to me?
Yes, I'm listening, Doc.
Okay, yeah. So I said that this is it's very important that we develop a framework for ourselves, because we need to assist, like I said earlier, about developing a framework to assist the smallholders. The smallholders must be assisted. Do you know that if we don't do things, if we don't work very hard to propose these things to our government, there will be problem in the future. Now, people think that that Africa is not, most of us that are from Africa, we don't really cherish Africa. I don't know if we understand that African soil is original. African soil, that is for farming. Of course, food security is very important. African soil has so much in it that we need to who are major stakeholders as well, because they definitely, we need to commercialize agriculture, and in commercializing it, we need to understand that even those people that are not from Africa, they are coming seriously. They want to take over Africa. Why? Because of what Africa has. Africa is endowed with so much resources. We are blessed so much with diversities of natural resources, oil and gas. We have diamonds. We have some crops that thrive in Africa that are services the industrial sector majorly, and we need to understand these things and know what we have, and then try to improve them, because they have direct link with also economic growth and development. Yeah, so every sector contributes to economic growth and development. So like sectoral contribution.
Could demonstrate that way.
That sector and that sector and the other sector. So we need to these things and be able to make proposals with respect to that. And then leadership, since we are having other, among other developmental issues, which is leadership. Yeah, leadership issues. So we need to also encourage our leaders, and not just that, we need to, like I said earlier, propose to them and recommend policies that favor financial inclusion.
All right, thank you very much, Mr. Ikechi.
Okay.
Doc?
Yeah, I'm with you.
Yeah, no, I'm satisfied. Thank you very much for that informative explanation. Thank you.
You're welcome. You're welcome.
All right. Do we have any questions, comments? Do we have any questions, comments again? Before our guest leaves, here's other commitments. No hand. Going once, going twice, going thrice. All right. I think if they have any questions, Doc, they will communicate with you via email or via your social media, your LinkedIn, your Facebook. We have all your details, né? So we'll share with them.
No problem at all.
Yeah.
I am still in SADC, and I hope that I will be physically there soon to also contribute to drive economy-wide growth. We are also doing a lot at the Canada-Africa Network, that is Africa Trade Action Group, and we are also doing a lot with respect to some interventions from the from the foreign, world for African farmers, for tomato growers in Africa, which you already know about. And we have also work that we are doing with the National Women in Agriculture Association. They are also trying to gain grounds in Africa from the US. Their headquarters is in Oklahoma, and I am the African Africa director. That is agriculture affairs for Africa. And then even the Africa Agriculture Agenda, where I am also the research and development director, as well as international coordinator for that outfit. So we are using, lots of mediums. That's aside my university role at where I work, and we train a lot of youths in Africa, encouraging them to develop an entrepreneurial mindset, because entrepreneurship is all about creativity, is all about innovation. What you are doing now, how can you do well in it? How can you be able to market yourself? How are you able to, be recognized with that talent, that God-given talent in you? And that's where Africa needs to wake up. We need to wake up with all these benefits of fourth industrial revolution, what it offers. And I think the education sector with Dr. Christian and all his colleagues and Professor, the HOD, and the entire institution, and we have a whole lot of role to play in this process. Yeah. So, and let us just work together. We will definitely make our mark, just as our father Nelson Mandela did.
Wow, thank you very much, Doc, for those words. And we really appreciate your time and your effort in trying to, educate us. We will learn until we die. All right, so we are looking forward to see you physically here. I hope that after coronavirus, we'll be able to invite you to come over. Before we close the meeting, I think I have two major announcements. The first one is on the 9th, that is Friday, the Agricultural Economics Association of South Africa will have a discussion on the impact of coronavirus on the agricultural sector, post-COVID, all those kind of things. So please attend that, guys. And I will share the link with my students and anyone who's, on my WhatsApp, my social network. We have the link for that. Also, on the 15th of this month, that is next week, we'll have another, nice seminar from one of our top economics, agricultural economics, Dr. Sifiso Ntombela. It will be on the 15th at 10 o'clock. So I'll also share, the link for that. Please note all these presentations, and my students knows that I don't play. I ask applicable questions on the test, and you have to take note of these presentations. I will take something from today's presentation, and it will be there on the test. So you have to make sure that you understand, you ask questions, you follow, and then you will be on the right track. You will be a top agricultural economists like Dr. Ikechi and Dr. Sifiso and Mr. Luvengo here. So by that, I want to thank you all. Thank you, Dr. Ikechi. In Xhosa, we say nangam, so meaning even on the next time when you are invited, please come and give us your lecture. Thank you. Thank you, guys. Have a good evening. Thank you.
Thank you so much. Yeah.